Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Monday, May 1st edition of Benzinga's PreMarket Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. Got another jam-packed show for you folks today. Some earnings to discuss. It is another big earnings week. We're going to preview some of the major stocks reporting later in the week. We do have a guest on 8:35. He's Tommy Lackey. He's a managing partner and PM at Relativity Capital Advisors. But before we get to all that, we have to get to Adam Feuerstein. He's a senior reporter at TheStreet.com. He's on the line with us right now to talk NTRP, which reported data this morning. Adam, how's it going today?
Good morning, guys.
Good morning, good morning. So some quick context for our listeners who aren't following this issue. Neurotrope reported data this morning for a potential Alzheimer's drug. The press release said it was positive top-line results. They reported a p-value of 0.7, which we know that the industry standard is 0.5 or lower. So positive top-line is what the company said. Adam, what are you saying?
The study failed. I mean, that's kind of that's the headline here. The study failed. So what they did was, and this kind of what a lot of people expected them to do was to try to spin something positive out of the failed study, and that's basically what they did. Essentially, they looked at half of the patients in the study. They sort of threw out half of the patients, looked at half, and found some improvement for their drug, which is called bryostatin, over a placebo. But as you pointed out, even throwing those patients out, it wasn't statistically significant. The p-value was actually 0.07, not 0.7, 0.07, which the accepted standard is 0.05. So it even failed there. And then even the improvement that they showed in this subgroup of patients is very small. Like it's not very clinically meaningful. It's a very small change in the improvement in dementia and cognition that you'd want to see a much larger improvement.
Right. So you mentioned that they did the study in 2 doses. They didn't even mention they didn't even mention the higher dosage, which you would think if the drug if it worked, then the higher the dose, the more it would work. I guess in theory. That's
right. Yeah. I mean, you like to see you like to see what we like to see is a dose response. So you want to see a better effect or a greater effect in the higher dose than the lower dose. They only talked about the lower dose, which tells you that the higher dose did not work at all.
Okay.
Or was worse. So
then what are the next steps here now for Neurotrope?
Well, the next steps for Neurotrope are I'm sure they're going to sort of move ahead because Alzheimer's is a terrible disease and we all want something. Everyone wants a drug that's going to help people with Alzheimer's. So what typically happens here is companies just move forward. They run trials that are negative. They try to find something, a little speck of positivity, some optimism, and then they move on to another trial. And I'm sure that Neurotrope will probably do the same thing. I know they're having a call at 8:30, so we'll hear more from them. But that's the history of Alzheimer's is drugs that don't really work just get moved into larger trials, and then when those larger trials read out, those trials don't work. It's unfortunate. A lot of money is spent on these clinical trials, but so far we haven't really seen anything that's very effective. And the stock, I mean, I don't know if the stock was, when I got on the call, NTRP was down like 40%, I think, pre-market, so.
So this is actually a drug that's been, in the pipeline now for a while. They were supposed to announce it in April, then they announced on Friday. We're announcing it Monday morning, so maybe some people thought that, they're not going to dump it on Friday at 4:30. Maybe it's good news. So you did see the stock respond a little bit on Friday. That turned out to not be the case, of course, as we're explaining right now. So not good news Monday morning. So is there anything else that Neurotrope has in the pipeline, or are they a one-trick pony?
I'm not familiar with anything else that they have. They might. I haven't followed the company that closely. I mean, this has been the drug that everyone is sort of focused on. Look, the stock. They did a big reverse stock split back in January. Then they uplisted to the Nasdaq. The stock had a pretty significant retail investor following. Again, in sort of in typical fashion. It gets promoted on the message boards. Traders get into the stock because it's going up. The stock had performed very well from like January up until today. So there was a lot of excitement and momentum around it. And, you sort of get that thesis creep where people, instead of it sort of being just kind of this trading vehicle, people start believing that the drug might actually work. Where if you kind of looked at the science and you looked at it from a very fundamental perspective, there really wasn't a lot of hope here. And I think, obviously people, sort of reality is hitting the stock today. So, I don't, again, but, I'm sure that they will press on because that's kind of what these companies do.
So, Adam, the last time we had you on, we were talking about small cap biotech stocks, raising money, on the heels of rallies. And so here we have a trial that is now complete. Do you think that they're going to go out now and raise some more money and maybe, transfer the holding of the bag to the retail investor?
Transfer the holding of the bag. Yes, that's a good way of putting it. Yeah, of course. I mean, I don't know when they'll need to raise money, but all these companies need to raise money, and if they're going to run larger or longer clinical trials of this Alzheimer's drug, they're going to need more money. So yeah, I suspect that they will. Somebody will hold out the hope that maybe some larger pharmaceutical company comes in to, maybe partner with them and give them money. But, I don't, based on these results, I don't really see that happening. Neurotrope is the only company kind of pursuing, this drug tries to attack Alzheimer's in a different way than most companies have tried to do it. And, that could be interesting if it worked, but it's probably more of a red flag in that, that most of the companies with much deeper benches in the science and in Alzheimer's have not saw this kind of way, this mechanism very promising. So it's going to be hard to imagine that, you're going to see a kind of a partnership coming out of this thing. So that means that Neurotrope, would probably have to go out and raise money.
Adam, Dennis Dick here. Just general question when you're trading these smaller biotech companies, because it seems like, every other day we have, one that pops 45, 50% and another one that drops 45, 50%, usually based on a trial. Is there a way you can approach these things when they drop 45%? Like, is there value here now potentially if they turn it around? Or is this thing, one now that the trial fails, is this one just, continues to leak? What typically happens, if
Dennis, I'm not I don't invest or trade in stocks, and so and I'm not a trader, and so I don't. It's hard for me to say. This thing is down 40-45% pre-market. If it closes, let's say it bounces at some point during the day, and it closes, again, theoretically, hypothetically speaking, it closes, only down 25% for the day. Someone's going to be out there claiming that they made money because they bought at the bottom and it bounced. Does that happen? Sure, it happens. Is it interesting to me? So from a fundamental perspective, does it really kind of change the outlook of the company? No, it doesn't. So I think the short term, these stocks are very volatile. They bounce. If there's short interest, shorts covering can have the stock going up for a little while. But, then after that, are there buyers who really want to step in and hold this thing? No. So the stock dribbles back down. So there's I know that there are a lot of people who like to trade these stocks, and obviously it's a good trading opportunity because the volatility is nice. But, there's over the long term, I don't think that really kind of changes the fundamental view of the company.
What about just the biotechs here in general? So, it seems like everybody, all the big guns at least are trying, they have some Alzheimer drugs there, that they're kicking around. Eli Lilly has, Merck has, and Biogen has tried to attack it, and everybody has struggled with it. I know Lilly got hit a while ago when their drug wasn't working out. Is there anybody that potentially, could, even the big guns, that have something to at least help along with this disease?
Well, it's interesting, kind of in advance of this call, with you guys, I sort of went back because I've been covering biotech for a long time, like 16, 17 years. So I went back and I was like, how many companies have I written about that tried to develop Alzheimer's drugs?
Yeah.
And I came up with like 24 companies, large and small. It's an amazing list of companies that I went back and looked through my archives. You've got companies as big as, again, Pfizer, Johnson & Johnson, Eli Lilly, Merck, to like little tiny companies like Neurotrope today. I mean, companies that have disappeared, that are no longer in business. It's an exceedingly difficult disease to treat, frustrating for researchers, and nothing has worked. In looking forward, I mean, the company right now, I would say, that people will sort of glom onto or are focused on now, is Biogen, which has, a monoclonal antibody against sort of the beta amyloid, which is kind of the sort of the plaques, the sort of the nerve-killing plaques in the brain. They're running a large phase 3 study. We're not going to see those results until I think it's 2019 or even into 2020. So it's a ways off before we see results. But that's probably the next big company that will have results from a large phase 3 clinical trial.
All right, Adam. Last one, and we'll let you get out of here. But going back to NTRP for a second. So when you see these press releases come out, right? They announce that they hit the primary endpoint. The press release is positive. You could say it's all spin. How do you advise the retail trader handle this information? The company's in full spin mode here. It may be harder to tell if the trial actually failed. Maybe you have to go into it with some prior knowledge. So how do you advise people to sort of handle these situations? And this won't be the last time.
Right. No, that's a great question, and I think that what it really just takes is some preparation and some homework for people to do. I mean, I think what you have to do is, particularly in this situation where you kind of know the results are coming. So we knew, and for Neurotrope, we knew that the results were going to be in April. Look, it ended up being May 1st. Essentially a day late, but that's okay. You do your homework. So you go back, you look at, how is the clinical trial designed? The company has talked about the design. What are the endpoints? What's the background on this? So get familiar with the drug, with the clinical trial, what the design of the clinical trial, what it's supposed to show, so that when you read the press release that ultimately comes out describing the results, you can get a sense of, how, whether the company's telling the truth, whether they're trying to spin something. So in this case, they don't actually say that they met the primary endpoint, really. They kind of have these, positive, they use positive in the headline, which of course, the algorithms see, positive in the headline, and that moves the stock, and maybe initially people are like, oh, it's positive, but then when you actually read the text of the press release and you sort of dig into it, you see that that it's not. So again, in this way, a lot of some preparation is, and some homework is kind of what you need to do before you start interpreting these kinds of press releases.
All right, Adam Feuerstein, senior reporter and columnist at TheStreet.com, one of the best biotech reporters in the game today. Adam, thanks so much for hopping on today. We'll talk to you again soon.
All right, good morning, guys. Thanks a lot for having me.
All righty. 8:14 now. Let's maybe get to some other issues. We covered about one issue there in 15 minutes.
Yeah, let's stick with biotechs for a second.
Okay.
Because a lot of people like to talk about biotechs. Adam making some great points there. We do see these things pop 50%, another one down 50%. It's hard to interpret all that. There's so much initial headline too, and I mean, even my interpretation as a trader is, I look at that initial headline, think about how much we try to simplify it, Spencer. We look, does it meet primary endpoint or does it miss primary endpoint? We kind of go to that. There's so many news algorithms doing the exact same thing. So when it is confusing, you definitely have some trading opportunities there. Like when it's not just point blank miss or or meet, and I don't know in this case if it was or not, but in some cases, like you said, they try to spin it a little bit, try to make it sound better. If they try to make it sound better in the main headline, there's the opportunity where a stock maybe has some disappointing results that could actually pop temporarily. So somebody who's really informed on that issue, really been following the issue, there is trading opportunities sometimes around these events.
Continued downside action here in NTRP. When Adam came on the show, was trading around the $10 level. Just made a low at 913. Did have a little pop. I mean, that is so hard investing in these individual issues. I know you've
Speculative.
Yeah, I mean,
speculative capital.
Yeah, and I haven't got burnt on any and haven't made great money on any. I mean, it's just you really got to know what you're doing. You really got to do your homework. And then this is another case where the headline comes out, and unless you're an expert like Adam, to be able to interpret, to have the background, also to be able to pull in the trigger on something like this. I mean, it's just not a safe way to invest in the markets.
But there's been so many people, like Adam says, trying to attack this disease, trying to attack this drug. I mean, we saw Lilly get hit on this before. I believe we saw Biogen, and like Adam was saying, maybe Biogen is the best, chance right now of potentially, coming up with something to help. But it's just very difficult to figure out, how, this disease here, obviously, and even, to help the disease, let alone cure the disease. So when you've got a smaller company like a Neurotrope that's, focused on this, and it doesn't meet the primary endpoint, it's going to get hit. So it's down 47%, and now you analyze, can the company, get some cash to get back and try it again? Potentially they can. Investors right now are saying there's $9.50 of hope here. But, these are still hope. The whole thing is hope, really. Hope that they can cure the disease, and get a windfall. And if they can, or, even help the disease, obviously the stock's going to be worth a lot more money then. But so many companies trying this and so many companies have failed. So anytime you're looking at these as investments, I've got to say it's speculative capital, especially when they're, more one-trick ponies.
And let's just talk, 156,000 shares have traded, which is for a bit, this is not a big stock. Traded 788,000 on Friday and only 184,000 on Thursday. So this is not a heavily traded issue, but you have some heavy volume here. It looks like some longs are thrown in the towel here. Pre-market low at 913. And I also noticed, I haven't done any long time history on this stock, but it had an all-time.
There's no long time history. I don't think there is a long time history.
102.40, Dennis. This thing was a $102 stock back in December of 2013. So I don't know if we've had some reverse split action or that was just the height of the mania.
I'm pretty sure they did.
Yeah. Okay.
In fact,
yes,
this year I believe
they did.
20.
They did.
Did they, Spencer? Do you have that?
I don't have the exact, but I know they did.
Yeah, it looks like 26 cents back. It looks like January the 11th to me. Stock closed that day at 26 cents. The next day it opened at $7. So I'm pretty sure there was a reverse split in there, or there'd be a huge winner.
All right, Flack UK here is just asking an S&P update, and we missed that at the top of the show. The S&Ps found support in the same area that they did 3 out of 5 times last week in the upper 2370 handle, and now we're bouncing up, double top from Thursday and Friday. Flack UK, keep an eye on 88.75. That was Thursdays and Fridays high. We have crude trading down 22 cents at 49.11. Just kind of can't get back over that magic $50 level. And then we have gold and silver in the red too. Gold down 380 at 1264.5. So let me, I thought it's 1260. Let me see if that's a significant level here in the gold market. Yeah, look at that. That's your bogey. Take out 1260. Continued downside. Well, Dennis, we talked about Twitter a little bit.
Is there ever continued downside, Joel, just before you change the subject to Twitter? That's market.
What about Twitter, overall. Dennis? Are you getting bullish yet?
You're still got that contrarian thing. You're still trying to find you're 10 points away from losing another lunch because you're so contrarian, Joel. You got to squeeze the contrarian blood out of you. I'm going to say it again. Such a momentum market. It's so difficult.
All right. Well, I did the update for Flack
I think all of my bets, and there's a theme, with me and betting against you. My bets have all been momentum bets, and your bets have been contrarian bets.
Yep, and you've won.
I think I get you.
Yeah, yep, and you wouldn't do a Twitter one with me, and now here Twitter's above $17. Spencer, give us the news on Twitter.
Twitter reached a deal with Bloomberg. They're going to have their own 24-hour streaming news channel.
And
So
Twitter was already in Bloomberg, so we've had, Twitter, tweets going into the Bloomberg terminal for a while here now, but it sounds like they're expanding their relationship here with Twitter. And you know what? I like this about Twitter. Do I like enough to come up buy the stock today? I don't know about that. If I was in it though, I think Brad's in it, so congratulations, Brad, because he gets more of a windfall here. Now it's kind of chasing a bit, but I like the fact that they're starting to maybe figure it out a bit. This is a news company. Twitter is, more of a news company than anything. Now, the news, obviously, they break things sometimes faster because, obviously we don't know if it's true or not. Anybody can tweet anything. But, when I'm searching for something, I don't see it, on the major news services. Then, I jump over to the Twitter and I start looking in Twitter. And a lot of times you'll find somebody talking about something. Maybe there's a rumor. Maybe, it's not official news yet, but there's, somebody that's saying something's coming out, So you do get, as a trader, it's a great tool. And, I use it as a tool, not just for tweeting, but just for finding out information. And, it's not only in the stock world, in the sports world, it's the same thing. If I can't follow my team, for whatever reason, you're on the road, Twitter seems to break, the score, the score goal, if you go search for your team before, you even see it on the major news. So it's a great news source for a number of different reasons.
Pre-market high 1722. We're just 4 cents off that level. Now based the daily in no man's land here between 17 and 18. That's when you gap down off for its last report here. So in order to fill the gap in Twitter, get all the way through the 17 handle, not sure if we'll do it today, a gap to fill up to 1806, right around a whole number here. I don't know if you're going to get a chance to buy this thing on the pullback. The day
it's
after
got the momentum.
earning,
We talk about momentum market. It's going in its direction right now.
Yeah, so Twitter looking good, up on good volume, 407,000 shares, up 70 cents at 17.18.
We just got some people talking about looking at NUGT, and I think is there multiple ETFs that are doing reverse splits here today, Spencer?
Yep. Well, let me get the exact news. Yes.
Yeah.
It is some forward splits. Yeah, today there's like 15 ETFs that are going today.
So you come in, you're seeing all these trade up or way down, but there's a lot of reverse splits happening here today. So it's not the big news. So if you're looking at those, and I don't know what all the lists are here. Do you have the list actually? We can just list them out.
It's 15 direction ETFs. I can tell you. That means they're all leveraged in some way. Let me get the exact list
That's
for you
some people
right
might
here.
be trading.
Actually, Scrawny B might have put it in there from Drexel.
Oh, he did. He did. Yeah. Direction. There we go. Good call.
Oh, perfect.
Oh no. That was from February. Oh, that was the date of the PR. So yes, today is the date it's effective. It's NUGT. It's their S&P bear shares. It's their gold ETFs, their S&P ETFs, and they're really their broad index ETFs. Let's see, Russia ETF RUSS. I see the semiconductor bear SOXS. And yeah, so the list is in the chat there, but it's all leverage ETFs. That's more on WD.
And this just is a great example of why you don't long-term invest in these triple levered ETFs, because they just deteriorate over time. There's, the way they're structured is, they're great day trading vehicles. You're day trading them and you're good at day trading them, by all means continue to do it. But if you're sticking these things in your long-term investment portfolio, I say it at least once a month on the show. And if you're sticking them in your long-term investment portfolio and you think, I got the triple long ETF of, whatever product it's tracing, and if it's up 10%, then my triple long is going to be up 30% at the end of the year. It does not work that way. They track daily performance only, and you will often and almost always lag, the overall indexes there. These things do not perform well long term. So they're not long-term trading vehicles. They are simply day trading vehicles. So we'll say that again.
All right, we do have a potential deal here, or rumors of a deal. Spencer, you want to talk about what's going on for Tribune Company?
Well,
here?
21st Century Fox partnered with Blackstone, and they're discussing a joint bid for Tribune Media ticker. Their relevant ticker is TRCO, which you can see is up in pre-market this morning. TRCO, of course, already had a bid from Sinclair, so we'll see how this plays out. But 21st Century Fox, Rupert Murdoch trying to expand his media empire in the U.S.
I've got to tell you, I know, rumors, technicals take a back seat here, but holy cow, this 40 level, Joel. Do you see this from 2016? Go all the way back from 2016. This 40 is like the Rock of Gibraltar.
All
You
right.
see it?
Yeah. Oh,
I don't know if I've ever seen a level that many times, just almost exactly, getting up to. And here we are in the pre-market on news again. And we've got $40 trying to put a lid on it. We're offered at $39.90 here in the pre-market. So I don't know. Obviously, when you have rumors and stuff, anything can happen. I mean, the stock gets bought out for $50 tomorrow. It's going to blow through 40. But, just trading it from a technical perspective, ignoring the news, wow, that 40 level is huge.
Yeah, pre-market trading, you did sneak above there, 40 and a quarter. That is your pre-market high. And just going back to what Dennis is referring to, I mean, yeah, if you draw your exact line on 40, yeah, you've hit that a few different times. Like last month, you hit 40.01. Also, going back a few more months, you hit 40 even on those. So this is one of those instances where, okay, there's buyers, there's rumors. Opens up where are we currently trading? Currently trading at 39, right there, 39.45. You don't want to see this thing tick 40.05 and then 39.75. Like if there's rumors going and no one is selling and everyone's buying, then it's 40.05, 40.10, 40.15, 40.20. That kind of continuation. Because if those sellers have been out there for a couple years now, they're probably not going away on a rumor of a deal.
If you are buying this thing, you want to see it take out the 40 with conviction. Just like Joel's saying, go 40, take out the 40 off the hop, 40 and a quarter, 40, 50, and blow through and forget about the 40 level. That's what you want to see if you are buying this thing. But I'm telling you, it's going to be a tough road maybe, especially when the pre-market one's not trading through right now, just because it's been tough there so many times and it is just rumors here right now. That being said, if news actually breaks and there's a takeover, then all technical bets are off. So I'm not sure I'm coming in here and just shorting out 40 when there's potential stock is in play here, because it could get announced, in the next minute and you'd be holding the bag. But $40 is a huge resistance point.
6,400 shares have got it up to
light
this,
volume too. Great
elevated level. So that's another thing that you want to keep an eye on here. It trades. It's not a heavily traded stock. Traded 400,000 or 500,000 in the last few sessions and back into $1 million. But getting it up, if you still had 20 you want to sell here, I don't think you could get it done right here in the 40 handle. But we'll see. We'll see what happens off the open in TRCO.
Let's jump back to the earnings reports we got from Thursday. We got a lot of big reports, and obviously the first trading day for them, besides the after-hours trading for Amazon and for Google, was Friday, where they were digesting the reports. And you made a good point here, Joel. Amazon was way up pre-market. It was way up after hours. And just quietly, it opened at the highs and just quickly, well, not quickly, but throughout the day, gave back almost the entire gain. Is that concerning to you? Because it was a really good report from Amazon here, and it could not hold the gains for even a day.
I mean, is it concerning? Well, I think what you have, and the reason that it vaults up like that and then just kind of peels back, is because you do have people just getting shorts out there. 950, 955. I think Ace was talking about the 960 level. So they're not. They're doing a fade. They're going against a trend. So they're not. I mean, what are they looking for? If you're trading for $1 in Amazon, you might need your head examined because the risk-reward ratio. But I just think the reason you had buyers like this is because, just people picking different levels to short it, taking their profits. I mean, it's trading back up today. I would look at almost filled the gap from Thursday. So I would just keep an eye on that, maybe fill the gap and maybe use Thursday's close. And another good thing to keep an eye on here is the all-time closing highs. You had several in a row for Amazon. If you're thinking of lighting up, maybe at least wait for that streak of all-time closing highs to break. I think they've had 1, 2, 3, 4, 5, 6 all-time highs and all-time closing highs in a row.
This has the potential for a 2-day move, though. And you know how I like my 2-day moves, just because I call it almost a reversal day. I mean, we were up so much, we give almost all of it back. And the way I play the 2-day moves is when it can take out the previous day's low. So we're going to open up here today. The market's up. It's up at 928. But if the Amazon sneaks down there and starts taking out the 924.33 low from Friday and starts going 924, 923, then I think you could lose another 10 points on this thing. So, maybe that's the play is, it's hard to short the stock. It's coming back and, it's have a big move, but it starts taking out on Friday's low. I might even be interested just in playing for a short-term trade. Being Amazon long-term has never worked.
Right, Scrawny B talking risk-reward ratios. He likes to employ the 3-to-1. So
Great risk-reward ratio.
Be right. Less than half the time and still make money. So
Yeah.
got some
Yeah,
good
that's
movers.
something we've said on the show a long time. I like the 3-to-1 risk-reward ratio too. So if I'm going in Amazon, and like you said, you can't jump in Amazon risking 50 cents. You're going to stop it all over the place. But if you're coming in here saying, okay, I'm going to risk, $3, and if it takes out 9.24, it comes back up to like 9.27, I'm going to give it a little wiggle room and it's out. But I'm going to go for 3-to-1 risk reward. So I'm going to risk $3. I'm going to try to make 9. So, that's, a playable strategy in Amazon. But if you're coming in there risking 50 cents, you get stopped out all over the place just because the spread, most of the time is 50 cents.
And the other stock that reported but had a big update, but really held on to those gains more, but still sold off really during the session was Google. But Google just hasn't had the kind of run that Amazon has had on the daily charts. But still, same kind of situation. Opened up near the highs of the session, just kind of drifted lower. Just big old gap to fill here in Google. Way down on Friday where you're looking Goog or Google, but all-time closing high at 905.96. I'm looking at the Goog.
And we're also going to let's just talk because there was some move up in Facebook on Friday as well. Facebook is going to report on Wednesday night. If we look, Facebook gapped up through the 150 area. We got up to 150, 153. Then settled right there, 150 and a quarter. We're getting a little lift here again. But it's an all-time high for Facebook. We've got earnings on Wednesday, and we've kind of had a little bit of a pre-earnings run already because we ran the last 10 days from 140 up to 151. I'm not sure if that continues here or not. I do think, I like the fact that Facebook didn't give back its gains despite Amazon giving back its gains because it really was trading up in sympathy. So, I'm going to watch, though, on Friday's low again. I think these are big numbers. A lot of times we say previous day's low is always big. In this case, I think it's really relevant just because we gapped up on sympathy. I want to see what it does. If it pulls back at 149.07, it needs to hold that if you're staying on the long side because it takes that out. It's a little bit of air below. And you just don't want to start seeing, some of these big momos start to roll over.
You're going to get a shot at yesterday's high, or Friday's high, which was the all-time high, 151.53, trading up 94 cents at 51.19. Haven't quite reached that in the pre-market trading, but they're the one and only level to keep an eye on shares of Facebook. Twitter holding on to its gains here, Dennis, not backing off, still up 73 cents. Very impressive here. Move.
It's got the momentum. And you know what? I think you could see $18 on this thing. I think, it's had a pretty good run already. And like I said, I don't know if I'm chasing it here now. It was $14.50 4 trading sessions ago. But if you're in it, I don't know. I wouldn't be surprised. There's a gap area you're in here now. I wouldn't be surprised if we see 18. I don't know if you can see it today, but, over the course of the next few days, it could get up there.
And just, the old trick of not trying to sell it while it's going up and just kind of, letting it go. And it's kind of kept me in this Western Digital. I don't know how long I've been able to stay in this. But instead of trying to pick a top, 80, 85, or 90 or whatever, just give yourself, move that mental stop up and say, okay, if it, now I'll move it up maybe from 70 to 80 here. But it's definitely a way to stay in it because once these stocks start running, it's very hard to pick a top. 8:33, we have just a minute or so before we bring in Tommy Lackey here. But do we have some earnings stocks to talk about?
There's not a lot of earnings here. So we had a couple smaller companies report. Cardinal Health, I believe, reported, and also Diamond Offshore. I'm not sure if you got those numbers in front of you there, Spencer. Both stocks are kind of muted trading activity in the pre-market.
Yeah, Cardinal Health Q1 EPS $1.20 versus $1.46. Sales of $31.8 billion versus $32.3 billion. So they missed on the sales, they missed on the EPS. They did, however, reaffirm their fiscal year outlook in the EPS range.
The stock got the beats there a week and a half ago, and 74 was the bogey. Got up there a couple times afterwards and failed. We're up here at 73 right now. I think there's still overhead resistance up at 74.
This is a kind of stock, maybe not a trade in it today after earnings, but this $72 level. Going
Both
back.
72 and 74.
Yeah, well, yeah. The 72 has a little bit more historical significance in it because you bottom in the 72 area. This is basis the daily chart several times going back to November. So just hanging in there, you dip below it a few times, but that's your bogey. And then on the upside, you're right, Dennis, the day on a gap down day, 74 was the high. You missed it once. So there's a trade coming here, breaking down below 72 or above 74. But you're right. Even if you do clear that 74 level, all those people stuck in the $80 handle are going to be looking to get out. All right, 8:34, Spencer here. You want to bring Tommy in on the fly, or you want to take a quick break?
Let's bring Tommy in on the fly.
All right.
Tommy Lackey, managing partner and portfolio manager at Relativity Capital Advisors. He always brings to the show his meltdown scans, his nitrous scans, and we're going to be joined with him in just a second as soon as he can answer his line. Tommy, you there?
Yes. How are you guys?
Good. How's it going?
Doing well. Ready to get things started.
We got you on live here today. A little bit of a change here, and as always, Tommy, we like to talk to you about the general markets here. I'm kind of stuck in a bet here with Dennis on the gap and go, the breakaway gap, and man, oh man, it's just not giving anything back here. Now I think you have a quad bottom at 23.78. Give us your appraisal here of the gap and go last week and the quiet consolidation afterwards.
Yeah, I think you have to be definitely paying attention when you get a gap like that on a weekly that holds. I mean, when you start off that strong on Monday and they don't find a reason to bring it back down and close that gap, which of course it could close this week, but from a psychological standpoint, it shows that was definitely strength and definitely people wanting to get in. Now the consolidation works even better because that just allows things to kind of set up again and give you some levels to trade again. So I think that's great. I think basically the biggest worry that people had was the stall in small caps in the Russell 2000 or IWM. But again, even it held its gap. It just didn't hold the all-time highs. But if you look at it from a volume at price standpoint, which is where basically levels where volume accumulates, that level's still around 138.50. So we're still above that at this point.
All right, let's go into one sector here before we go into your nitrous scan here, and the financials. They were the big leader post-election. Some of the other leaders have gone by the wayside, such as U.S. Steel, some of these other steel companies. Basis the XLF here, what are you looking for? It looks like we've had a little bit more than a 50% retracement. You looking for the XLF or individual issues in the financial sector to regain their momentum?
Well, and I think that's really what it's going to take to see some of the broader market try to continue strength, especially in like Russell 2000, because it's such a large percentage of that income or index is financials. But when you look at it, it did make a strong move early last week, and then it just started to move back to close the gap. It really depends on how it comes out of this at this point, but the volume wasn't all that heavy as it pulled back on Friday, and it just looks to me like it could continue. If it holds this 20 SMA and the gap here, that'd be great, and then we can start working ourselves our way up, and that would actually start looking like an inverse head and shoulders. So we could be building the right shoulders, but I hate to say that a lot too early because you want to wait and see where it stabilizes.
Tommy, let's jump into your nitrous scan. I want to go right to the bottom of it from the list you gave us there, and you have Nordstrom on the bottom, JWN. And it's interesting. I just brought Nordstrom up, and it looks like it's ready to break out. And then I look at a chart like Macy's and Kohl's, and they kind of are leaning on the lower, and they almost look like they're ready to break down. So it's interesting when you start seeing, one department store, taking a leadership role here. But Macy's and Kohl's have not followed suit, really. Not nearly as much as Nordstrom has anyways. So I don't know why, but Nordstrom looks stronger here on the charts.
Well, it definitely does. And basically, I can't tell you exactly why or what it is they're selling. I certainly hope it isn't $425 jeans with mud on them, but that's a whole different discussion. But I can get you those a lot cheaper, but and I won't even wash them. But basically here, you look at Nordstrom's, and this is one of the things that I do tend to lean on, which is Options Hawks, Options Database, I've now started putting in my notes, is that you look in there and this thing has just been pounded over the last month in May calls, all the way from 42.5 up to 50 calls in large, big orders of 2,000 to 5,000 contracts at a time. So there is something different going on here. I don't know exactly what, but if you put that kind of call activity together with a chart that looks like this, then it's something worth finding a spot.
Sticking with the retailers too, another one that actually looks okay as a retailer is Foot Locker, FL. We bought them back in January, and we had the big run up, then we sold off a bit. We're right back up near the highs we were in March, actually taking out the highs from March there. So here's a retail stock that, even going out to the monthlies, this is very close to an all-time high, which is absolutely incredible considering how depressed the retail sector has been.
Yeah, I mean, it's a great looking setup. And again, it just goes down to why a lot of times you have to look back down through and into individual charts. I mean, it's you're going to find these things. And that's one of the reasons I run the scans I run. It's not that they're perfect and not that they give you every great opportunity, but a lot of times you can find these gems in areas that aren't so hot. And especially since retail over the last week or so, the XRT has started to kind of turn and roll its way back up. So if retail does catch some retracement, these leaders are the ones that will probably continue to lead.
Another stock that's been performing well as of late is Workday, WDAY. And this stock is up about $6-7 in the last couple of weeks here. What do you see in the chart in WDAY?
Yeah, this has got a gap close above, just below 90. And I think that's one thing we're looking for here. But if you look at how wide and long this daily base is, and if it pulls its way up out of it, you're basically looking at a cup and handle type pattern on the weekly chart there that would send this into, let me see if this is all-time highs or not. No, it's not. But send it up into the mid-90s. But I'd say that somewhere between that 92 and mid-90, 96 area is really where you're probably going to get the bigger resistance. However, if it moves over 96, really don't see much until you get all the way up towards the highs in the 115, 116 area.
Let's look at Splunk SPLK. This stock made a high back in 2013 of $106, and then since then it really got hit in 2014, actually going down a few times to 40, and then actually in 2016 getting all the way down to $29. Well, we've been on the comeback trail here a little bit in the Splunkster, and we've been coming back actually in the last week. We went from $59 up to $64, so SPLK trying to show some life.
Yeah, and it is, and that's the thing is I like it from the stance of the way I look at the chart and all that. And if it really gets over that 65, 66 level, it's got some more room into the mid-70s. However, there is some pretty big put action in there that you just want to be careful of after a almost straight up 10-day run. So this is one actually that I would say that you watch for that breakout, but it might almost be more attractive down in the 62 to 62.50 area if it decides to come in some.
Here's a smaller gambling play, CNTY, Century Casinos. Got a little flag forming here there, Tommy.
Yeah, see, last week we talked about Caesar, CZR, and it took off. It already started, and it just kept going. Another really small casino name. Here's another one. Who knows if it'll do the same thing or not. But yeah, I mean, it's moved up to these highs, and it's a big daily and weekly level. And if you look at this thing on the weekly level, that weekly pattern is a huge ascending triangle. And so you just kind of watch that, and it does look like it's not all-time highs, but this is the highest level this thing has seen since around 2007. So now you're into this little daily flag to where it's flagging above that or right at that breakout level. So yeah, it moves above those highs, and I think this one could run for a bit.
Look at this one, Foundation Medicine, FMI. This thing looks like it's in breakout mode here as well. And you're also noting a 25% short float. So you always like the stocks when they're breaking out and they got a few shorts that might have to cover.
Yeah, I mean, that's that. And then you also have some in-the-money puts that were sold in early April, which is someone also expecting it to be higher. I mean, selling in-the-money puts, you're pretty darn sure that it's going to be heading up some. And so those are three things: a beautiful breakout, high short float and someone selling in the money put. So that's just a great looking setup to me.
Coming out of the chat from Rod Hood, Ben, thoughts on the weekly candle, and is this a good entry zone for BEN looking basis the daily charts?
Yes, have that down in my other section down there at the bottom, and I do like it here because your stop level is pretty defined. Under did I put a level exact level in there? No. So probably, if I'm looking at the stop level, I'd probably be looking at under either, depending on how tight you want to be, 41.50 or under 41. But yeah, I like to get in these sometimes before they make the larger breakout, and that's what this one's looking like. Is it's making a good move here, and then you're looking for, the goal is for it to break above 44, and if it does, it can probably move swiftly.
Meltdown filter looking pretty scarce here, Tommy. I know you don't like me to say that, but I'm only seeing 3 stocks in here. We'll run down real quick, and then we'll let you go. PLXS, potential short here. Tell us what you're seeing in PLXS.
Yeah, and just so you know, there were definitely more on the list, and there always are. I don't cover nearly as many are in the scan. However, some of them are so extended, I don't like to put them in because there's not really a good opportunity. So I only like to put them in if we see something we can work with. But basically, this one's one that looks like it's rolling back over. And it looks like right here is where you can bring lower, and then your 200-day SMA is at 5107. If it breaks that, it goes fast. But it's on one of those ledges we've talked about. It tried to survive, and it just couldn't get any meat in that bounce. So if it continues, I'd say even under Friday's low, it might be worth a shot against that. What level did I put above? Yeah, against move over 454.
DC1 is asking about NEP. Quick thoughts on NEP.
NEP. Don't know that I've ever looked at it, so let's take a look.
Actually, did they get some love in Barron's over the weekend here? Let me see if they're trading up here. I thought I did.
It doesn't look like there's anything trading. I don't know in NEP. I know NEE, but NEP, I mean, the chart looks good. It's trading sideways and for about a month, and it's trying to break out of that level. On balance, volume's pretty good, but there's not a lot of volume in here. And it looks to me, I'm not sure what kind of energy play it is, but it's a limited partnership type setup as well. I mean, it's just one of those that's probably can continue to stair-step the way it's been doing.
Yeah, I think they have a good history of increasing their dividend, and also they have a pretty good profits coming from the wind production. All right, Tommy, I'm gonna give you one more here off your meltdown filter, and this is an interesting one. Look at both ways in DHR, 84 to 82.40. Tell us what you're seeing there.
Yeah, I mean, this is one where it fell hard and then it bounced back up and it reclaimed the 100-day moving average, I believe it is. It is the 150, sorry. Reclaimed that, and now it's trying to basically get pinched between that and the 8 EMA, which the 8 EMA is a very short-term moving average, but it's one a lot of traders use. So basically, if it can pop above that 83-ish level, worth a look, but if it gets below I believe I put 82.40, wasn't it?
Yep.
Yes, 82.40. Below that level right there, then you're probably going to visit the 200-day around 81.13, and again, a break of that could be more trouble.
Tommy Lackey, managing partner and portfolio manager at Relativity Capital Advisors. Good follow on Twitter here at GT Lackey. Tommy, thanks a lot. We'll speak to you again next Monday.
All right, thanks, everybody. Hope everybody has a great week.
All right.
Thanks, Tommy.
All right, for about a week or so, Dennis has been trying to talk about contrarian investing and some of the potential hazards of it, which he hasn't gotten through to me yet. So, Dennis, I'll give you the mic here for a few minutes, and we'll let the chat maybe jump in with some questions.
Well, I was going to talk contrarian versus momentum trading and contrarian versus momentum investing. So it's actually two different animals, but similar strategies. So I've had a couple of people just say, because I'm mentioning on the show, what are you talking about when you're saying contrarian trading? A contrarian trader just basically goes against the prevailing trend. So if the trend is up, they're trying to sell short. If the trend is down, they're trying to buy it. And they're, coming in saying that the trend is going to turn. A lot of times they're trying to call the bottom or call the top, but, overall they're fighting the tape. So momentum is obviously going with the trend. So when you've got, the trend is up, the momentum trader is looking at the pullback to buy it. And then when the trend is down, the momentum trader is looking at if there's a little rally to sell the stock. This market, I will tell you, for the last 7 years has been very much a momentum trading market. A lot of traders, there's been a lot of new books coming out, a lot of trading theories that focus very much on momentum. And, even, Tommy there is more of a momentum trader. You talk about a lot of his scans. It's what has been working for a long period of time. Sometimes you get into these little periods of the market where, it'll reverse and, contrarian trading will start to work again. But overall, for the last 7 or 8 years, this market has been dominated by momentum traders. And it's like you get the ball going in one direction. We always say, it's tough to fight that tape because, it's almost self-fulfilling. When the trend starts going up, then you have more momentum traders start to come in and they take the stock even higher. So, it's a little bit of, just a tricky market to stay contrarian in. But that being said, Joel and I have been, Joel's been in the market since 1987. I've traded the markets full time since 1999. And I can tell you there have been periods, where momentum has worked and contrarian trading has worked. I don't know if I've ever seen a period this long where it's been such a momentum market from a trading perspective, but it has, and I don't know if it's because there's so many new strategies and so many books that are focused on momentum trading and so many websites that are focused on momentum trading, and it's almost self-fulfilling. But, it has been a difficult market for the contrarians for a long period of time. There will be a time again where contrarian trading will, dominate. You have to be able to, work with that. So, sometimes breakouts don't work. Sometimes breakouts, potentially become, fake outs. We talk about that. And, there was a period from 2002, 2003, 2004 where the markets chopped around a lot. And contrarians were really doing well, and momentum traders just couldn't get it figured out. So, you've got to always be able to adjust. I'll say, even when I'm making these bets with Joel, the reason I've won a few of the bets as of late is I'm making momentum bets, and the momentum has just been the easier trade. Now, if we talk contrarian trading versus contrarian investing, it's kind of different. So a contrarian investor is simply looking at, not so much the overall trend, but buying stocks when they are weak, buying stocks when they've had a disappointing earnings report, buying stocks when they are deemed cheap. I've always kind of been a contrarian investor. I'm a momentum trader right now, but a contrarian investor. So, I look at stocks, even like I was saying, with Twitter, and I know I didn't buy it, but Brad was buying it and was pulling down. I was like, I like that 14 level. It's going completely against the trend, but, Brad picked it up there, and that was a contrarian trade and a contrarian investment that he made, and it worked here because all of a sudden it started to show a little bit of life, and boom, it's got an earnings report. Now momentum's on his side. So you can see how the ball has turned there. But, contrarian, there's a time and a place to be a contrarian trader and a time and a place to be a contrarian investor. As of late in the last 7 years, though, it's been very difficult from the contrarian side. Just let Joel to let you know that it's something, that, because you've been in since 87, Joel. So you've seen so many different markets and you've seen a lot of a lot of trends reverse, and they do reverse eventually. And if you can get those, the contrarian trader is always going to be first on the reversals. So because they're trying to call it, as it's going the other direction. Just give us your thoughts over your, 30-year trading career here, on contrarian versus momentum trading.
Well, I mean, first of all, the contrarian stuff that, I talk about with you is very different from, the long-term approach, to the markets, because exactly what you said, it's been a momentum market. People are not shorting things in your portfolios. I mean, that's the way that I look at things from the longer term perspective. Yeah, I mean, it's just keeping an eye on the market. There's different, kind of what you're talking about. There's different trends within the different sectors, like the momentum, moves from one sector to another. So I think that's one thing. If you're doing the momentum investing on the short term, you got to realize, well, there's the momentum market here, like the big cap, tech stocks. That's where the momentum is. That's where,
True.
You don't want to be contrarian. So there's different sectors, and you just have to make sure that you're, if you're doing this on a shorter term basis, that you're still not trading a momentum stock or sector when it's kind of falling off the radar.
Yeah, and Brad, makes a good point here too, and I'll just read you with the question that he asked us in the chat. He's saying the struggle I have with momentum is I always feel like I'm chasing. Where does one draw the line between the two? And it's a great point. And if I'm doing, and I would say I am a momentum trader. I'm looking for the trends and I'm going with the overall trend. When it starts to deviate away from the trend, I kind of, lay off. I'm sitting on my hands and I'm not, saying I'm going to short the thing because that would be a pure contrarian trade fighting the overall tape. But if you've got a trend, and we talk about the purple crayon, you draw your line. Well, let's say the stock starts to really go and starts to pull away from there. Well, that's where I'm just sitting back and not making a trade on it, not making a contrarian trade, because the contrarian would short the stock because it's pulled so far away from trend, saying it's got to pull back to trend. That is a contrarian trade. I'm saying that's been a difficult play because sometimes these, pesky, trends, and sometimes they really can take off on you and you can, get caught in a hurry. But when it comes back to trend, if I was a momentum trader, that's when I would strike. So let's say, stock is trending, over the last year, going 50, 55. Now all of a sudden it goes 62, 63 in a few days. It's pulled way away from trend. Pulls back to the 57 and that's that trend. That's where the momentum trader, I think, should strike, is when it comes back to trend. If trend breaks, that's where you get out. And that's maybe sometimes, where there's, the potential for a contrarian to strike as well. There's always those confliction points there where you've got a stock that's been trending up for a long period of time and now it's breaking trend, and now maybe the momentum start going in the other direction. But the contrarian, at that point can call where it's going to break trend. Then the momentum traders hop on, they start hopping out because it's broken trend, and then you get other short momentum traders coming in, and that's where the momentum could actually take you down. So it's all about trend is what I would say, even for contrarians and for momentum traders, is focus on where the trend is, and if it's trending up, then you want that trend to hold. It starts to break, that's where you start to strike.
B. Morris asking, value investing the same as contrarian? I would say it's a subset of it. I mean, if you have a value stock and it's, it has a big run and then has a pullback, then you're identifying your area of value. So I wouldn't really put value investing in the contrarian camp. It's more as, waiting for a pullback. Dennis, any comments?
I mean, it can be. I think they're two separate animals too. I think, when I'm looking at value investing, I'm looking at dividends. I'm looking at the fundamental information, where contrarian is more of a technical indicator, obviously. You're looking more, at, fundamental information when you're looking at value. Like, I like the company. So when I'm investing, and I've got an investment portfolio of roughly 75 stocks, keep it completely separate from my trading. And in my investment portfolio, I have, a time horizon a lot of times of 5 to 10 years. Some of these stocks I've had in there for 15 years. So, they're staying. These are companies that I like. These are companies, I've been a value investor for a long period of time. Kind of follow the Warren Buffett approach. I don't have a lot of super high flyers, stocks with high P's in there. I've got a lot of, stocks that, have been there for a long period of time. They've got decent dividends, but that's, sometimes I will buy them, as a contrarian when they're pulling back, when everybody hates them. Procter & Gamble is a great example of how I had a pretty good contrarian trade and contrarian investment, in a stock that everybody hated. If you go out to 2015, you can see Procter & Gamble just all of a sudden went into free fall over the course of, September. Everybody started hating on it. They were having all kinds of trouble, and the stock went from $90 to $80, down to $70. It got under 70. And I can remember it was Flash Crash Day. I actually picked it up on Flash Crash Day, completely contrarian to the trade. But I threw it in my investment portfolio saying, look, at this point in time, I like the value here in Procter & Gamble. I don't care what the chart looks like. I think there is value here, even though the stock is trending down. I'm going to put this in my long-term investment portfolio. Could it continue? Sure, it could continue. But I thought there was value in Procter & Gamble at that time. And then, obviously I got lucky because I was actually the low that day. So sometimes you don't always get it perfectly. I got this pretty close to perfectly, picking up at 60. $8. It was dead to go down to 65 because of flash crash, but I took, that heat was only for a few minutes even, and it was all the way back. And then over the course of the next 2 years, I had this in my stock, or a year and a half, and it's come back up, and it's gotten to a point now. It got to a point last year when I sold, at the end of 2016, where I thought, this is up at $88, $89. It's kind of, come back a long ways here. Now I don't feel the value is there anymore. I feel like, the P's expanded here now. Company really hasn't, grown the earnings here to justify the previous move. And I thought, that's why I sold it. So that's, analyzing from a fundamental perspective. And again, my sale was a contrarian sale because momentum was on side. But there's an example of, contrarian investing, longer term, investing, where it can work sometimes. So, there's periods of time where momentum works, periods of time where contrarian trading works. But I've always found in my investment portfolio that I actually do better, it seems like, as a value investor when everybody hates the stock.
And just to address probably the toughest investment question coming from Spice, safer to wait for a pullback and a contrarian investing. And that's one thing when you're taking a longer term perspective. Let's say you want to own a stock, it's had a big run, you want to participate, and you're worried that you're not going to get a pullback, then you don't have to go all in. You can put, if you wanted to put $1,000 into it, you could say, you could pick your levels of interest. You dip your toe in the water. If, with 250, it pulls back a little bit more. You can do it on a longer term basis. That way, if you get a little bit in there and it keeps on going, you're like, you don't have that in your mind. Oh, I missed it. So that's one way to do it. All right, 8:59. We've covered a lot of different issues in the show today. Thanks to Adam F. for coming on to give us his interpretation of NTRP. I'll just close here. S&P futures got up to 87.50. Big level. Dennis needs us to take out 23.8875. That's the highest from Thursday and Friday. And there'll be no downside follow-through in this market until we take out that pre-market low. 23.77. That you had 3 out of your 5 lows from last week right in that area as well. Spencer,
just before Joel decides to cut us off here, I want to give it a balanced look here because we didn't get a chance, and there's some interesting ones here as well. So AT&T, 397,000 to sell. Verizon, 213,000 to sell. Pfizer, 152,000 to sell. Coke, 223,000 to sell. Some of these are defensive stocks that are in the Dow. So it's interesting that that's where I'm seeing, some heavy sell imbalances here this morning. Twitter, which we knew was going to be strong here off the back of the Bloomberg deal, it's up 145, or it's got 145,000 shares to buy here this morning. So it's going the opposite way, but some big sell balances and some big Dow components here this morning.
Thanks for that, Dennis. Real quick, want to remind our listeners that the Benzinga Global FinTech Awards are next week, May 11th. If you're going to be in the New York area, don't forget to check it out. You can go to BenzingaFinTechAwards.com to learn more about the people that are going to be there, ticket logistics, and all of other relevant information. That's our show for the day. We are Nick Shaheen on the docket for tomorrow's show. Hope you enjoyed Adam Feuerstein and Tommy Lackey. We'll be back with you folks on Tuesday. Please remember that all the information, material, and content from our show is for informational purposes only and not meant to be investment advice. Have a good rest of your day. We'll see you folks tomorrow.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.